Silicon Valley Bank may very well go under. SVB Financial Group. This is an insane situation here, folks. I doubt very many people out there were even familiar with this bank prior to the last few hours, nonetheless. And we're going to talk about what's going on here, the ramifications it could have for the market in general. And I want to kind of take you through this. I'll actually read you kind of through a Twitter feed here, essentially, that I thought was, a thread that I thought was very, very good in kind of explaining the situation, okay? Now, let me first off say this, okay? I've talked to some folks that are kind of in the VC space. Let's just call it that, okay? What these folks have told me is this is extremely serious. They have told me that essentially they're pulling their money out, okay? And there's a bank run going on right now, actively, like literally right now at SVB. And basically, people are being advised and advising others to basically pull their money out, like causing a bank run in this situation, okay? It's getting ugly very, very quickly. And I've seen even private messages from, like, let's call it between a bunch of different founders and things like that. And what these messages are showing is that they're all pulling out their money right now or advising to pull out their money over the next couple of days nonetheless, which is creating a bank run dynamic here and going to put this organization literally at jeopardy of potentially being worth nothing within like a matter of a day or two. Okay, we're going to see how all this transpires, but I'm telling you, based upon what I've seen, it's a bad situation, and it's going so bad so fast it's not even funny in this whole situation, okay? And so what I've seen, guys, is very, very ugly, okay? And you can see this. I mean, the stock was down at a shocking 60% today, okay? This is a bank. Like, banks don't move 60%, okay? 60% today. It's down another 16, almost 17% after hours, okay? And this is basically a bank that is doing a lot of activities. We'll run through it here in just a moment, but obviously the whole market slowdown in the tech space has hurt them in a substantial way. It looks like their risk management was horrible, and ultimately a lot of tech founders, they keep their money at this SVB bank, and they're all pulling left and right now, which is creating likely a bank run on this situation, okay? So hope you guys enjoy me kind of giving you this information to kind of educate folks on something that I would say most folks don't even know about this prior to a few hours ago, right? And I appreciate everybody. Thanks for being subscribed here. I appreciate y'all, okay? So let's kind of run through this. Silicon Valley Bank is in trouble. It sold off $21 billion bond portfolio for a huge loss to shore up liquidity. Right off the bat, that smells desperation, okay? You're doing something like that, smells desperation. At this time, the stock was down 54% when this lady did this kind of thread here, okay? Silicon Valley Bank announced that it completed a fire sale of its $21 billion AFS bond portfolio. The bank took a massive $1.8 billion loss on the sale. That's more than the net income of the entire company in 2021, which was $1.5 billion. That's shocking because we know for this particular company, like 2021 was about as good as it could possibly get for a company like this. Like, absolutely incredible, right? Now SVB is planning to sell $2.3 billion in shares to cover the bond losses. The stock crashed 60% actually for many reasons. Mainly SVB is scrambling to shore up liquidity. Oh boy, okay. Oh boy. I can tell you, with everybody talking and everybody pulling out their money left and right now and over this next few days, it's not going to make the liquidity situation better. I can tell you it's going to make it shockingly worse, and that's why I wouldn't be surprised if this baby goes to zero, like in a snap of fingers. Like, with how bad things are deteriorating here, it's definitely at least something that's a potential, right? That's worrisome. And selling shares to potentially cover losses on investments is a huge red flag. It's been a huge week in banking. Just yesterday, we heard that the crypto bank Silvergate will wind down operations due to many of the same issues SVB is facing, which it'll get to, right? How is SVB's liquidity? According to the company, okay, they have $180 billion available liquidity to cover $169 billion in deposits, right? I don't know, okay? I'll just put it like that. I don't know. And a lot of these founders and a lot of these tech founders are very knowledgeable on, they're some of the most educated folks on what, these big banks might have or not have, right? And I can tell you, if a lot of these huge tech founders are pulling out all their money, right? And from what I've seen, most of them are pulling out everything. Some are leaving in $250,000 because $250,000 is FDIC insured, right? For those, many of these folks have millions of dollars, some even tens of millions of dollars, or maybe even hundreds of millions of dollars with this bank. For those people to be pulling out and scrambling like this smells like there's something much bigger going on here. Like they're literally fearful that this baby's going to be worth nothing, right? And keep in mind, once again, your money's only FDIC insured up to $250,000. So if you are an individual that you've got, $28 million, let's say, well, that's a random number, $28 million with this, bank, right? You better get your money out, because I can tell you, you're not going to get $28 million back if this baby goes under. You're going to get $250,000 back, which is startling, like extremely, extremely scary in this situation, right? Dilution is another reason the stock is tanking. $2.3 billion in new shares is about 1/3 of the company's market cap as of today, and I can tell you it's going to be a whole lot more than that percentage of the market cap as of tomorrow. Oh my gosh. Why is Silicon Valley banking selling off bonds at huge losses? A bank is facing two problems. The first is interest rates. SVB positioned itself horribly just before interest rates increased. The company's $21 billion bond portfolio had a yield of 1.79% and a duration of 3.6 years. Compare that to today's treasury yield of 4.71%. Oh my gosh. So basically, SVB was just kind of planning on, rates would be low for all of eternity. And heck, they'd been really low for like 15, 20 years. So why wouldn't they continue to be low, right? And then that ended, right? As rates rose over the last year, the value of SVB's bonds fell dramatically. And the bank had a choice: ride out the 3-year duration of its bonds with a yield far below the current treasury rate, or sell at a loss and reposition the portfolio to maximize yield. Basically, SVB had to decide how quickly it thought rates would decrease. And clearly, they don't think rates are coming down anytime soon. Here's SVB's plan to fix its yield problem. Sold the $21 billion of fixed rate securities there, right? Increased Fed cash target to 4 to 8% of total deposits from 4 to 6%. Okay, we didn't move up that 4. I noticed. Okay, we moved this side up, but we didn't move that 4 up. Reconstruct AFS portfolio with short duration fixed rate UST, U.S. Treasuries. Hedge the AFS portfolio with and receive floating swaps in that situation. Okay. No. The other crisis that SVB is facing, the lagging tech market. SVB is the 15th largest bank in the United States in terms of assets. It's especially popular with tech companies, as its name would suggest. A struggling tech market means fewer deposits in SVB. And the restricted IPO in capital markets mean that VC-backed tech companies have less money and deposits into banks, right? Because think about it, right? Right now, the IPO market's dead. Completely dead. Completely dead. Look at how bad it was in 2022. Don't be surprised if 2023 is just as bad, if not worse, when it comes to IPOs, okay? And so basically right now, you can't take these companies public. There's no appetite. We're not in a risk-on market right now. We're still very much risk-off in this market. And so until you get a sustained period of risk-on, right, you're not going to see the IPO market heat up. I don't know when we go risk-on the market again in terms of to a sustained rate where companies would feel comfortable taking companies public, IPOs happening again. But that could be 6, 12, 18, 24 months from now, depending upon how ugly things got, right? But I can tell you the absolute best case scenario is maybe 6, 9 months, okay? But you could be talking about potentially several years before the IPO market heats up in any meaningful way again. SVB is facing a slew of other problems today. Moody's cut the company's credit rating and downgraded its credit outlook to negative. And with tech in trouble, SVB can't count on the massive growth it has seen in recent years. Ooh, but SVB isn't the only bank facing the situation. Maybe it's the first to proactively attempt to fix the problem, but the market expects more pain in the banking sector. Silvergate already announced it is closing earlier this week and basically just trying to give money back to, investors. I think they're kind of working with the SEC in that whole situation to see what happens there. And it reminds me a little bit, you guys ever seen the movie Margin Call? And basically there's the first kind of fun guys that do that fire sale there, and they're like, we just need to get rid of this. And yeah, it's going to take down everybody else, but we're going to survive in this situation. And it does it's a little reminiscent of that, right? Silvergate faced many of the same problems, but with crypto. Oh, that's funny. They used the meme from that as well. But with crypto instead of tech. Silvergate's bond portfolio went sideways as well, and its customer base was hurting badly after the crypto crash of 2022. And, that's kind of that whole situation, right? So I sold off my $21 billion NFT portfolio for 15 cents. That's pretty hilarious, right? Oh, gosh. Oh, the stock was $700 in 2021. Oh, my goodness. That's insane. So nonetheless, folks, this is actually a really serious situation because, it looks like a bank run. Okay, I'll be completely honest. It looks like it's going to be a bank run situation. And I don't know where this whole thing trades out, but I would say right now it's actually a decent probability this thing's worth nothing within a matter of a few days, okay? We'll see what transpires here. But I'm telling you, with how many people are just pulling money, this is not going to make this company's situation that better, this SVB bank. It's not going to make it better. It's only going to make it worse. And with the lack of faith there and everybody pulling out their deposits, who's going to loan them more money to get through this situation, right? Now, this leads into a problem when it comes to VC space, right? Because this could create dynamics where some of these VC companies, right, these venture capital-based companies, some of them might not have the next flood of money coming in. And if that next money doesn't come in, then those companies go under, they have to sell quick and then like a fire sale to a bigger tech company, or, their employees get laid off and that's just kind of that, right? And it's a wrap. And it's like, oh, that didn't quite work. And I'm telling you, Silicon Valley is loaded with money-losing companies that need to constantly be infused with cash every 3 to 12 months, essentially. Every 3 to 12 months, it's like, we need more cash. We need more cash. And if all of a sudden you're talking about some sort of freezing of the pipes in the VC space, essentially, which means just kind of like, turning off the faucet of all the sloshing of VC money, like, hey, we need another 25 million for our company here. We need another 25 million. We need another 50 million, 100 million. If you're talking about shutting off the faucet, the amount of casualties there will be in the tech sector for all these private companies that lose fortunes of money trying to make it as the next big tech company someday, it would be pretty immense. So this is a rather serious situation, actually, we need to keep an eye on. And it looks like we actually have a real bank run going on here. And I don't see the Fed coming to help something like this, okay? If this was JP Morgan, a Bank of America, or Wells Fargo, something like that, it's a whole different situation. This, I don't see it happening. And we're going to have to see how things transpire over the next few days because we got to see what dominoes could potentially also be impacted because of this, right? Because if one bank is hurt here, they might have loans or deposits with another bank, and then that creates some sort of domino there. That's where it gets a little scary for the market. So we'll see all this transpires. I'll keep you guys up to date. I appreciate everybody joining me. As always, 24,200 plus subscribers, guys. And crazy situation, man, just out of nowhere. And this is something that, the Fed wants to keep pushing rates. You're going to see probably more of this before you see none of this. I'll just put it that way. Some of these funds that, and banks that have been doing some things that, I'll just be honest, some of the big banks can't get away with. I mean, some of these other ones, these more regional banks, these more kind of, shadowy type banks, let's just call them that not a lot of people know about, they get away with doing some stuff that I'm just telling you, the big guys, Wells Fargo, Bank of America, JP Morgan, those guys can't get away with. So we'll see how all this transpires. I appreciate everybody joining me as always. Pin comment down there, scale your portfolio 6 figures and beyond. It's a good, helpful workshop for folks that are looking to do that. Appreciate y'all. Keep you up to date. Much love and have a great day.